Ladies and gentlemen, good day and welcome to the investor call of Cigniti Technologies Limited to discuss the Q2 and H1 FY23 results. Today we have with us from the management, Mr. Srikanth Dahilam, Chief Executive Officer, Mr. Krishant Venkatachari, Chief Financial Officer, Mr. Vinay Rawat, Chief Revenue Officer, Mr. Raghuram Kovadi, Chief Delivery Officer, and Mr. Sairam Vidam, Chief Marketing Officer. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Snighter Albuquerque from Adfactors PR. Thank you, and over to you, sir.
Thanks, Irene, and a very good evening to everyone. Before the call, we would like to point out that certain statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the earnings presentation shared with you earlier. The investor call may contain forward-looking statements based on the currently held beliefs and assumptions of the management of the company, which are expressed in good faith and, in their opinion, reasonable. Forward-looking statements involve known and unknown risks, uncertainties, and other factors which may cause the actual results, financial conditions, performance, or achievements of the company or industry results to differ materially from the results, financial conditions, performance, or achievements expressed or implied by such forward-looking statements. The risks and uncertainties relating to these statements include, but are not limited to, risks of expansion plans, benefits from fluctuations in our earnings, our ability to manage growth and implement strategies, competition in our business, including those factors which may affect our cost advantage, rate increase in India, our ability to attract and retain highly skilled professionals, and our ability to win contracts, changes in technology availability of financing, our ability to successfully compete and integrate our expansion plans, liability, political instability, and general economic conditions affecting our industry. Unless otherwise indicated, the information contained herein is preliminary indicated and is based on the management's information, current plans, and estimates. I now hand the conference over to Mr. Srikanth Dahilam for his opening remarks. Over to you, sir.
Thanks, thank you, Snighter. Good evening, everyone. So just some quick highlights for the quarter. The company has yet again accelerated its revenue in the current quarter by 10.2% to 416.65 crores in comparison to the previous quarter. The company has been able to demonstrate this sort of growth for more than 6 quarters now, especially in an environment of uncertainty. The company during the quarter has won 9 new clients. We have been especially focused on the quality of accounts that we are opening in the last 9 months. And with more vigilance towards investment in sales and development, and with various optimization measures that have been initiated, that we've been updating in the previous calls as well, the company has achieved a higher margin compared to the previous quarter. EBITDA reported for the quarter stood at 60.76 crores, up by about 36%. And the company's net profit also has risen to 41.53 crores as against net profit of 31 crores in the previous quarter. In its biggest brand move in a decade, Cigniti has unveiled a new brand identity and a new logo reflecting its renewed vision to help its clients in achieving their digital transformation objectives and achieve market leadership. This new brand identity is a thoughtful expression of our continued dedication to advancement and innovation. And we've renewed our vision. We're now calling it "Together We Will Build a Better Future Through Technology-Led Transformation." And we believe this is what will drive every solution as a as a collective group of people to achieve the mission and vision. And just some quick updates on the acquisition as well. Following the we've largely integrated the acquisition, and we continue to invest in people and areas related to data governance, UI, UX, DevOps, digital strategy, and architecture. We have been upselling some of the newer services to our existing clients, and we've been getting positive feedback about the new offerings that can be provided for our existing clients. And we are excited about the possible outcomes in the next 2 to 3 quarters. Adding up to our industry capabilities, the leading analyst firm ISG has recognized Cigniti for its capabilities in power and utilities and retail sectors. In the previous calls, I've updated such recognitions for BFSI and HCLS. And at a macro level, we are sort of seeing elements of uncertainty, especially with a diverse set of clients that we have. We're seeing minor pullbacks in investments, certain tendencies of slowdown, but not in a full-blown manner yet. We continue to remain cautiously optimistic, and we will continue to focus on initiatives that will help us drive our vision and achieve our mission. So at this point, I will hand over the call to Krishnan to cover the financials.
Thank you, Srikanth, and good evening, ladies and gentlemen. A warm welcome and advance wishes for Shubh Diwali to each and every one of you and your family members. And also good afternoon and good morning if in case somebody has logged in from the overseas locations, considering the time zone. I think the quarter by large, what has been explained by Srikanth, has been a predominantly a great quarter. We have achieved about close to 10.2% growth if you look at it in terms of rupee term, but I think on the constant dollar currency term, we have contributed 6.5% in terms of where we are, what we are at dollar terms. So we moved from 49.17 million to 52.3 million in terms of the revenue on the top line. And the bottom line, we have been able to do a remarkable recovery as we have planned over the quarters. What the investments have been done, there have been some amount of pressures in terms of midterm increments and various things which has impacted on the last financial year. I think that went through ahead, and then that started yielding results in terms of onboarding of people or whatever it is. So the costs could be kept under control, and we were able to get the full-blown billability of close to 150 plus resources into the current quarter, which has made us realize in terms of the margins where we are. When it comes to the question of the sectoral contributions, the revenue sector, BFSI continues to dominate, BFSI and retail and e-commerce, followed by travel and transport and hospitality. The heartening fact is basically the travel hospitality sector has started bouncing back, and we have been maintaining a good relationship, and we are expecting this to really start moving up in terms of contribution, though we are cautiously optimistic overall in general in terms of the market. While the BFSI contributed about close to 22-23%, retail e-commerce have contributed 17%, and travel at about 13%, and healthcare at about 13%. So this is a major chunk of contribution coming through. While it is so, probably the revenue rates in terms of realization has remained stagnant for the quarter, with the positive news in terms of most of the negotiations what we have done basically have gone for a rate revision, and we expect some amount of cost increase on account of instability in terms of the recruitment, retention, considering the attrition or whatever it is, will get priced in with this kind of cost inflation which has come through. So that's a heartening fact which the sales team have done a wonderful job in terms of getting ahead for the renewal setup, revised pricing which has come through. While we have ensured that the rates remain there, we are very confident that with our digital selling coming through in a bigger way, with Apara coming on the way, we should be able to realize better dollars in the coming quarters as we have upcant in terms of trying to give a value-added services on an end-to-end basis. Coming back to the cost, I think the attrition which has been there on a higher side and which has been lingering at a quite high numbers across the industry, I think we have stabilized, and we were able to see probably not the last quarter is not the measure. Probably the year could be a better measure if you look through basically, but we expect the attrition to drop down. We still were there hovering around at the later stage when I'm coming on to the call. When you look at it at this point of time for the month, basically, I think we have done better. We have moved in the zone at about close to 25-26%. But I think for the quarter, it has been hovering around 28%. And then, for sure that we are going to catch it up and bring it down when it comes to the year end as an average as to what we are at to the attrition level. In terms of the capex, there has been some amount of capex necessitated in terms of the need base with the employee numbers moving up, and also on account of the accounting which has been necessitated due to acquisition of Apara for the value consideration paid in terms of both tangible assets and the goodwill and intangible which needs to be classified, and those intangibles definitely get charged off, and that is one of the reasons in terms of the accounting. The depreciation is slightly on the higher side. We have controlled on the finance cost and the return on the other income, which we have generated fairly a good amount of cash flow over the last 2 quarters, which is roughly 44% of the EBITDA. And the conversion of cash flow is 44% of the EBITDA. And we have generated a good return equivalent to about 6-6.5%. We've been maintaining a cautious vigil in terms of trying to be careful about the investment, not only protecting the capital, but moving ahead. Out and out, our receivable days, if you look at it, has been very, very healthy in terms of about 52 days. And we have not seen the tendency of the customers in terms of either insolvency or kind of a bad debt or whatever it is. And there has been a cautious approach in the overall scheme of things. And given the stance where we are in, and given the order book position which is staying healthy, as it stands, I think we are confident of the quarters coming ahead, though we are not in the process of giving a specific guidance into where we are, what we are. But I think the run rates stipulate very clearly that we are in the territory and galloping ahead. With these few words in terms of the financial number snapshot, I hand over the mic to my colleague and the CRO, Vinay Rawat, to give a glimpse on the sales and strategy and the market feel as to where we are, what we are. Over to you, Vinay. Yeah, Vinay?
Hello?
Yeah, Vinay, we can hear you.
Okay. Good morning, good evening, good afternoon to everyone. Thanks for joining this call. I think most of the points actually have been covered by Srikanth and Kristen from finance and demand perspective. I just want to mention a few things. Last quarter, we actually mentioned that we had initiated a new go-to-market strategy in terms of deepening our relationship and focus on accounts, which we already have. And I'm glad that our strategy actually is leading to a good result. We are actually deepening our relationship. We are expanding our footprint into our existing accounts, and that is definitely going to help us in selling additional services which we have acquired through acquisition. It's been a very secular growth, across different industry segments and customer base. That certainly is healthy from our perspective. One thing which actually we have noticed so far is that the demand for highly skilled and talented people continues to remain strong, which actually continues to put pressure or at least inflation in wages. We are seeing more that kind of trend on site, which is especially in North America. The other thing, customers actually have become a little cautious. They're cautiously optimistic. Nevertheless, what we saw during pandemic, especially last year, that demand is something which is softening. Everyone is very cautious, especially about recessionary pressures, which is being anticipated in the industry, especially technology segment has become soft. There are certain other places where we are seeing the customers they're not pulling off the projects right now, but they are definitely being cautious. And but from our perspective, the demand still continues to be strong, and I think we have enough room for deliver the growth which actually we have planned for ourselves for the next 2 quarters. So that's the commentary on the market demand side I have from my side. Unless there are any questions, I will be happy to answer them. But back to you, Christian.
Yeah. Thank you, Vinay. That was a good summary. And I will now request Raghu, our Chief Delivery Officer, to say a few words on our client experience and the kind of offerings which we have started putting on the table. Over to Raghu.
Okay, thanks, Krishnan. Good morning, good evening, good afternoon, all. I think in line with what Srikanth, Krishnan, and Vinay outlined, in line with the GTM strategy, we have been able to provide additional offerings and services to our existing clients, deepening relationships in the areas of digital engineering, data and analytics, AI, ML, and so on and so forth. Srikanth did speak about our integration largely completed, so that allowed us to increase our depth and breadth of expertise that we can offer to our clients. And we only expect this to grow quarter on quarter. And we also, on the supply side, have geared up in terms of ensuring we have strengthened our training, cross-training, and upskilling programs. That has allowed us to also improve our margins. We have had an intake of freshers and junior skill unit, which we worked upon over the last few quarters. We are also seeing an early sign of receding attrition, but too early to make a trend out of it. But I'm sure that, when compared to previous quarters, we are able to hold our talent in a much better manner. With all of these, I think alignment of GTM, integration of the new skilled company that we acquired, and rejigging our supply to meet the client demands, we are able to increase our footprint in our existing clients. Our customer satisfaction score continues to remain very, very strong. And it's also heartening to see our existing clients opening the doors for us to participate more deeply into their digital transformation programs. So with that, I think, so far so good, and we are in line with our progress versus plan. Happy to answer any specific questions any one of you will have later. Over to you, Krishnan.
Yeah, thank you, Raghu, for the brief note. And I invite now Sairam Vedam, Chief Marketing Officer, to give a little bit glimpse on the marketing efforts. Over to you, Sai.
Sure. Thank you, Krishnan and Srikanth, Vinay, and Raghu. I hope I'm audible. Good morning, good evening, and good afternoon for everyone. A quick update, most of them have been covered. Reaffirmed, repositioned, revitalized, relaunched brand identity has got noteworthy global mentions across the ecosystem. Global media, tier 1 media globally, both in abroad in the US, both Wall Street and Indian media in particular, the tier 1 media acknowledged the revitalization of the brand. Advisor community and analyst community took note of the repositioning as an integrated digital player, bringing in both digital assurance and AI-led digital engineering capabilities. So that's from the corporate branding perspective, which is in line with our renewed mission and vision and aligning with the overall digital ambitions of the company. The second update, as an outcome of some of these constant endeavors, as a brand, we've been awarded as one of the prestigious brands of India from diverse segments of the business by the leading branding and advertising agency DARC, and our chairman was also, acknowledged for the contribution to the Indo-American business corridor on a sustained basis. So that's from a recognition standpoint. Just a couple of points while Srikanth talks about the ISG recognition on the vertical footprint. I'm also happy to say that Gartner actually mentioned and put Cigniti in the preferred hype cycle for managed IT services in the quarter that went by, which is a reflection that we've moved the needle from being a pure play quality engineering company to both a digital assurance and as well as a digital engineering services company as an outcome of the recent acquisition that we spoke about. and we continue to get recognized for our API testing capabilities, which is a very deeper aspect in the connected digital economy. So that's more or less, as I agree with all our executive management, we are cautiously optimistic. We are constantly listening to our customers and partner ecosystem and ensuring we cater to the growing needs of talented employee base, which is the most important element of our brand. That's from my side. Happy to answer any questions, and I'll give it back to Krishnan.
Yeah, thank you, Sai, and I now leave the forum for the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and then 1 on the touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, just once again, if you would like to ask a question, you are welcome to press star and then 1. The first question is from the line of Ravi, and he's an individual investor. Please go ahead with your question.
Hi, good evening, sir. A couple of questions from my end. So just wanted to understand the steps taken in terms of margin expansion, because currently we are seeing an average industry margin in the range of 15 to 17% for software testing companies. So what are the steps that we are undertaking to reach that kind of margins which are sustainable?
Okay. You have any other question, or you want me to answer this question by question?
Question by question would be very helpful, sir.
Okay, sure. I think as you have seen probably the way we have galloped from 11-12% margin to 15% almost nearby, with bringing in more efficiency in terms of reviewing the utilization buffer and blocked resources. And also, if you look at it on a constant basis, where we have been trying to avoid the downtime in terms of the people joining, a lag time probably from the time the people join to people getting into the billability role. While that continues to be the endeavor, it is the couple of steps which are being currently taken out clearly are that we are trying to do on a continuous process in terms of a pyramid mix which is going through. Second is that for the similar accounts where we are renewing with the kind of cost increases which we have absorbed over the last, say about 6 quarters, now we are trying to go through for a revision, at least if you look at it, the top 20%, and the rest of the accounts contribute about balance 50% approximately. So where we are trying to get through to the top 20 definitely for sure, and then getting back to the rest of the accounts in terms of seeing where best the rate revisions can take place. So the first step is a pyramid composition change, and the 2 is that we are now trying to look at it in terms of the rate revision. And the third point in general, what I have explained to you very clearly that with the offerings increasing, where we are trying to mine more in terms of the depth and breadth of the customer's accounts very clearly. We are trying to get a bit better rates for our offerings like RPA or newer offerings. So that shall continue to contribute, and where we try to look through the new age technologies, including digital contributing. So this is a continuous step. We are also clear and ambitious that we need to get to the 17%, but we don't put a pen down to say very clearly this is the year we are going to achieve. But our endeavor is that sooner the better, and where we need to get there, and it's a constant process. And the efforts what we have done over the quarters have given us benefits now, and we are confident of pulling it through and improving it.
That's helpful, sir. So going ahead, like with the things that we hear on the recession and everything, just wanted to understand from, your perspective, how is the business getting impacted? I mean, do you witness a change in, the client's requirements?
I'll just answer in brief and probably invite Vinay to answer this, which he has addressed it in the beginning. I think over the last year plus, I think there's been a change in sales strategy invariably, and where we have started focusing on mining the accounts, splitting the accounts into strategic accounts, growth accounts, and nurture accounts. I think that paved a way foundation where we were also able to move away and capture invariably predominantly mission critical applications in most of cases, and especially on the top 20 accounts. So what happens is that any kind of a recession, any kind of I would say not a recession, it's a cautious approach, what is being adopted out or whatever it is, it will not impact in a greater way to us. While I won't say that we are exempted from this and we are in the industry and we have to be a Roman in Rome, and we will definitely get impacts at, but the quantum could be minuscule. And we know that with the overall volumes, what we are trying to achieve, that will get adjusted. And while we are working on a mission critical applications, I don't think that's going to take a toll. While I stop here, probably I can ask the expert, Vinay, to really give the market view in terms of what is the trend on that line and how are we mitigating this. Yeah. Over to you, Vinay. Vinay, you are able to hear me? Hello? I think, hello?
Yes, sir, I can hear you.
Hello? Looks like I think we have lost a signal. Hello? Yeah, Mr. Ravi, I think I've answered the question probably. Srikanth, yes, you'd like to throw a few pointers on this? Additionally, anything?
Yeah, I mean, so like Krishnan mentioned, I mean, the kind of trends we are seeing is, first of all, we have a diverse set of clients. So there are some pockets where there is extreme, there is an extreme impact in terms of how they react to recession in a not so good manner, and there are pockets of clients who use recession as an opportunity to grow. We have both the set of clients in our current roster, so that will probably provide a hedge against the overall scheme of things if there is if there's an extreme scenario. But having said that, the kind of trends that we are seeing at this point is, like when I mentioned, it's not too extreme at this point, but there are pockets of areas where people don't want to replace resources if there is an attrition, and there are other areas where we have an opportunity to consolidate the overall IT vendorship and provide value to the clients. So that is what we are seeing at this point in time.
Right. Thank you, sir. Just one last question I have from my end. Just on the continuation of the same, towards the long-term vision, are we looking for any more acquisition in the coming quarters? If yes, then what are we looking for? Like in the same kind of offerings, or are we trying to add any new offerings?
So we are continuously evaluating the companies. I mean, like I mentioned, we always keep the ear to the ground to evaluate companies that will add to our capabilities, to our digital footprint, maybe a new geo such as nearshore. So some of those elements we are evaluating. Obviously, we continuously look at what our clients need in terms of newer capabilities, and that is where we usually try and do some bolt-on tuck-ins.
Thank you, sir.
Yeah, thank you. I request the operator to unmute few of the Cigniti management team members. I think that is the reason that they are not able to speak.
Thank you, sir. They will be unmuted. The next question is from Anuj Panwar of Family Office. Please go ahead with your question.
Hi, good evening, everyone. First of all, congratulations on the good set of numbers. I just wanted to understand in terms of the kind of service that we offer to the clients. And are these services customized as per the client requirements?
Okay. Thank you, Anuj, and thanks for the wishes. Raghu, I request you to take up this question in terms of the services what we offer to the customers.
Krishnan, if I understood the question right, is what services do we offer to the clients today, right?
Absolutely.
Yeah. So, thanks for the wishes. And as you know, when we were a pure play quality engineering company, everything related to test engineering, everything related to the services catalog that a typical independent testing company offers. So we continue to offer those services to our clients because that is still at the core of where we are. From a digital engineering services standpoint, we have started offering services around native digital development, AI/ML, data and analytics, and also in terms of RPA. So those are the new set of services that we have augmented to our quality engineering services at the core. This is helping us to play the 9 yards of digital while still ensuring that the quality assurance is provided, which is very important in a digital transformation.
Okay.
Your question?
Yes, I had one more question. Could you tell me what is the general time taken to onboard a new client? And once onboarded, what is the time frame for the execution?
Krishnan, you want to take that up?
No, yeah. I think it's a question to sales. Probably Vinay, I can request you to answer in terms of turnaround time from the proposal to the conversion. And that's what is to understand the question. Yeah, please go ahead.
Krishnan, can you hear me now?
Yeah, I can hear you, Vinay. Yeah.
Okay. I think I was muted earlier. So it actually depends. Like there are three types of businesses which we pursue. One is extension of our existing business. The second one is in our existing business we actually expand, which is new business in existing accounts. And the third one is new business. So I will start with the new business. Typically, the pursue time for a new customer and varies anywhere between 90 to 120 days. So 3 to 4 months is an average sales cycle for a new business. For existing new business, which I was mentioning, the cycle is somewhere around a quarter. And renewals, so these renewals depends on the budgeting cycle of the customer. From an overall renewal cycle perspective, it does not take like let's say more than 30 days. However, we have to keep an eye on that on a continuous basis. So therefore, I can mention that it's a continuous exercise which actually we continue to remain engaged with the customer. Once we acquire the customer, from an execution perspective, it depends on the size of the team. It depends on the service which we offer to the customer. But the execution time actually will vary anywhere between 4 to 8 weeks to begin the execution. And of course, after that, there is a continuous engagement with the customer. I hope I answered your question.
Yes, that was helpful. One last question I had. Also, if you can give some color on how the order book has moved to the end of the September and how much of that order book is from the recurring clients. If you can share the number compared to the June quarter, that would be really great.
Just to put it on perspective very clearly, in a year on an average, probably yes, about 15% of the contribution comes from the new revenue, and the rest of it is invariably from the existing clients. So that speaks the volume probably in terms of where, and especially with the current strategy where we are growing with mining of existing clients. And as it stands, our order book position seems very healthy. It is sitting at a position very clearly that close to about $100 million in terms of the order book position which we currently have in terms of the close to one positions, and with a healthy pipeline which is over there. Comparing to, it has been a progressive over the quarter. If you look through comparing to the last quarter to this quarter, I think there has been definitely a good uptick in terms of that is that because what happens is that the order book gets built and then automatically the order book varies invariably. So if I look at it as a standpoint as of 30th of June to 30th September, as to where we are, to be very precisely, while we were at 30th June, we were there at order book position in terms of about close to, say, about 85 million or so. Today we are there in a position which is roughly at about close to 101 million or so. So there is a healthy amount of trend in terms of where we are cover up on wins and start building up. A good amount of pipeline is available for us. I hope to have answered the question.
Yes, you have. I think that would be all. Thank you for clarifying, and very happy Diwali to you.
Yeah, thank you. Wish you the same.
Our next question is from Hiten Boricha of Joindre Capital. Please go ahead.
Hello.
Yes. Yeah.
Am I audible?
We are able to hear you, sir. Please go ahead.
Yeah. So first of all, pardon me, like I am a non-IT guy, so just wanted to understand, can you help me in explaining this digital engineering business in a layman's language? Like what exactly do we do there and what kind of growth opportunities we have there?
Sure.
Yeah, I'll take it.
Yeah, please go ahead.
Yeah, it's pretty simple in the layman's language. If you look at any enterprise, right, any conventional business like a bank or an insurance company or a healthcare organization, they would have had a lot of software applications. They are called typically legacy applications. And today's business mandates them to put such applications on cloud. There's a lot of data sitting, it could be from source data from inside transactions, data that can come in from external interfaces that these applications will have. So today's companies want to mine such data and make predictive decisions for efficient business outcomes. The third dimension is a lot of these enterprises are productizing themselves instead of relying on conventional standard applications, the legacy. Mm-hmm. All of that leads to what you need is also the experience in which those applications are delivered and consumed, like how we use an iPhone or how we use an Android phone, and pretty much everything happens over that. A lot of these applications today are either voice-driven, conversational-driven, where you can interact and talk, or you can actually pretty much appify the whole experience. So a culmination of all of this and the ability to build such experiences for customers is a one way of looking at what digital engineering is. It means building such applications. In the process, you will obviously have to test them much better than what it was, and it cannot be done slowly, and it has to be automated. And that part is digital assurance, where you need to ensure security, you need to ensure that it is frictionless, and you need to ensure that they are well performed. So if you club both of this, the ability to build new applications, renew the old applications that are there, make them cloud ready, and leverage data, and also ensure through the process quality is taken care, not just an afterthought, but from the beginning to the end. So that's in a way, if you have to look at the digital, it's called the Uberization of experiences, sir. So I'll just stop here, and I just hope it gave you a glimpse of what it could be.
Yeah, it was helpful, sir. So what is the current market share here?
Market share or market size?
Market share, sir.
Yeah. So, as a quality engineering digital assurance company, we continue to, it's a $35 billion market. The digital engineering market is about $630 billion market. So we are obviously starting our journey towards being a digital engineering company, which substantially gives us headroom of growth. So I would say quality engineering, we hold about, we are there in the overall world top 10 players in terms of digital assurance, and if it is only independent, it's probably in the top 3. But if you club with digital engineering, the beauty is at the current revenue size, we have billions of dollars of market to go and garner for. Our market share right now will not be comparable to any of the big companies, but the market share that we can garner is significantly larger for us to grow 10 times, 15 times, whatever, right? So that's how we look at it. So there is significant amount of headroom opportunity for us in both places.
Okay. So just a follow-up on this. Do we have any internal target for this market share? What are we planning to do in next 2-3 years in this?
I will let maybe Krishnan or Srikanth take that one.
Let me put it, just summarize basically in our growth plan to $1 billion, where we are planning over a period of next 5 years, is that we are expecting that about 60% will come from the digital and advanced technology area, and the rest comes from the quality assurance and engineering area. That is just the target in terms of end state where we are going to progress.
60% from digital, right?
Yeah, absolutely. On $1 billion journey.
Okay. I have one more question. Can I go ahead?
Yeah, please go ahead.
Yeah. So currently the IT industry is facing attrition issues in quite some time. So you mentioned currently our attrition rate is around 28% and it will go down to around 25% by end of this year, right? So what are the measures we are taking to tackle this problem?
Yeah, so I just wanted to make it very clear that I've not committed any timelines on 25%. The optimism is very clear that it will come down, while the trend today very clearly says that it's a declining trend, but we can't be complacent. So invariably, we are spending a lot of money, dollars in terms of training the existing workforce in terms of upskilling and reskilling. Two, we are trying to make the workplace which is more attractive. I think after all, money is not that which leads and ends the life invariably. So we're trying to make the workplace better. We are trying to give them the customer experience in terms of trying to interact with the customer. So there are a slew of measures which we are trying to take out as generally done by people, but I think in our place, we are trying to give some amount of, at a minuscule level, some kind of a leadership roles and trying to give them the responsibilities to scale up. I think we're trying to make it more professional and personal space, something interesting, and there's a lot of measures which HR is taking through, and which is helping us, and which we are very confident that which will help us to run through. Apart from that, we also have this variable pay structure which is available in the company where the people get rewarded as the performance they contribute starts moving up. So there is a linear scale in which it oscillates. So I think these are the measures which we are doing basically to bring down on the attrition clearly.
Okay. That was helpful, sir. Thank you.
The next question is from Deepak Poddar of Sapphire Capital. Please go ahead.
Yeah, thank you very much for the opportunity, sir. So I just wanted to understand with regard to the vision that you mentioned. Now, this 5-year vision is $1 billion revenue. That's what you mentioned?
Yeah, that's the vision we are thinking, yeah.
Okay, because earlier I think we were targeting around $500 million by FY26, right?
Yeah, absolutely. Now we are trying to look at it to accelerate it because of the kind of opportunities and the kind of offerings getting rolled out on the table. We are trying to look at FY28 or so ambitiously to reach to $1 billion, both organically and inorganically coupled together. So I think it's always good to think high and start working. So that's the whole idea.
Okay. Yeah, that's the clarification about it. That's it from my side. Thank you very much.
Our next question is from Vikas Verma as an individual investor. Please go ahead.
Hello? Yeah. Please go ahead, Mr. Vikas. We are able to hear you.
Sir, congratulations for good number.
Thank you.
My question is, sir, एग्जिस्टिंग कस्टमर जो अपन माइनिंग कर रहे हैं,
हाँ,
जो न्यू ऑफरिंग है, इसका सक्सेस रेशियो क्या है सिग्निटी का?
सिग्निटी का सक्सेस रेशियो बहुत बढ़िया है। आई एम सॉरी फॉर द अदर ऑडियंस, हिंदी में कंफर्टेबल है आप बोल के, हिंदी में थोड़ा मेरे को ब्रोकन हिंदी मालूम है, मैं बात कर रहा हूँ।
जी जी, आप जैसा बोले मैं समझूंगा। जी जी।
हाँ ठीक है, थोड़ा क्षमा कीजिए। सक्सेस रेट इतना अच्छा है, उसके लिए हमारे को हर साल में अभी देखे तो लास्ट 2-3 साल से माइनिंग का रेवेन्यू ज़्यादा हो रहा। सो नया रेवेन्यू ऐड करके बिल्ड करके जो भी आ रहा 10-15% तक आ रहा। माइनिंग का सक्सेस रेट और स्पेशली वो न्यूअर ऑफरिंग सब आने के बाद सेम क्लाइंट को आसान हो रहा हम लोगों को जाके इतना काम किया हम लोग, तो उन लोग ने भरोसा है हमारे ऊपर कि अच्छा इतना अच्छा काम करे, इन लोगों को ये भी देंगे दूसरा भी देंगे बोल के। सक्सेस रेट तो बहुत बढ़िया है हम लोग को।
मतलब अपन इसको 70 to 100% मान के चल सकते हैं, इंडिविजुअल जितने भी अपने कस्टमर एग्जिस्टिंग उनके साथ में।
एग्जिस्टिंग कस्टमर के साथ अवेलेबिलिटी के हिसाब से, अवेलेबिलिटी जितना भी है सिग्निटी का क्वालिटी के हिसाब से कस्टमर सेटिस्फैक्शन है 3.9 आउट ऑफ 4 आ रहा, तो जो कस्टमर ऑटोमेटिक हम लोग देख रहे हैं कि कन्वर्शन हो रहा, उसमें तो दिक्कत ही नहीं है।
तो सर नंबर ऑफ कस्टमर जो अपने साथ में कई सालों से हैं या 2, 4, 5, 10 सालों से हैं जो बने हुए हैं।
हाँ हाँ, कस्टमर भी बहुत सालों से बना हुआ है हमारे को। अगर आप तो टॉप 20 में देखें तो कम से कम 15 कस्टमर तो हमारा साथ ही चल रहा ना, तो उसके लिए
सालों से लगभग
ले सकते आपको कम से कम 4 साल से तो चल रहा।
4 साल से,
4 साल के ऊपर भी।
थैंक यू वेरी मच सर, और हैप्पी दिवाली आप सबको।
या थैंक यू, हैप्पी दिवाली टू यू ऑल।
Our next question is from Kishab Garg of Countersic PMH. Please go ahead.
So thank you very much for this opportunity, and I wanted to congratulate the management for doing an open market share buyback. So thank you very much on behalf of all the shareholders. And sir, I wanted to understand that in the light of what you said about the attrition trends prevailing in the industry, which hopefully should reduce going forward. Sir, last quarter we had a employee expense of around 240 crores. So going forward for the rest of the quarters of this year, you think that our employee expense should remain in this range only around 240-250, or a significant jump is expected due to any increment or bonuses that you might be planning to give in the third or fourth quarter?
Our appraisal cycle is April. So invariably the next appraisal cycle falls in April of next year. But coming back to the cost in terms of it is a variant of business basically, because we are running a business currently which is 97% linear. 97% linear मतलब it has to be people dependent very clearly. So हमारा business जब बढ़ते जा रहा invariably aggressively business बढ़ रहा बोला तो वो cost भी थोड़ा बढ़ेगा आगे से, because in tandem से हम लोग see we have to look at it very clearly as to how do we optimize that cost and enhance the, in the sense control the costs and then enhance the gross margin. That steps we will take invariably. More or less, we also feel that we should be able to retain these at these levels, but there will be marginal variations depending on the business growth which is happening around. अगर हम लोग same 53, 53, 52 million कर रहे बोले तो cost हो ही रहता. But if I start moving up the value chain in terms of trying to garner slightly more numbers depending on the orders, the execution time, depending on the need, उसके हिसाब से जाएगा. But what is to be seen is that not the salary cost of pegging it over there. The cost which needs to be looked at is clearly the margin at which where we are earning. For example, थोड़ा बहुत cost, if you look at the overall salary cost, which will include even sales and marketing. But that is a factor where I need to invest. I might not have invested in 6 months. When I see an opportunity in the market, and if I don't prepare myself by investing into that upfront, which will take a shade in a quarter or so in terms of the cost moving up, which is fine because that is what will yield me over the next 6 quarters in terms of the result.
Sure, sir. Sir, also wanted to understand that if we see that in the past 5 years we have grown by around 15% CAGR. So now in the next 5 years to expect 45% CAGR, which is 3 times the growth rate of past 5 years, and also looking at the headwinds in the global economy, and since most of our revenues are coming from Western markets, which are in probably some kind of economic turbulence. So you think that we have a realistic, I mean, it's always good to have to aim high, but so you think that this is realistic, and we might not do something reckless to chase this kind of growth, some kind of reckless acquisition which can really hamper our financials?
No, it's a good question. Definitely, we are very cautious. While organic growth, the growth what we talked about in terms of the trajectory is not just organic alone. It is both organic and inorganic. And inorganic has got its own shade of positives and negatives. So we are innocent of the fact being a service delivery company as to what is that kind of an inorganic growth which we need to do and what it can do very clearly. So while we have an ambition to be $1 billion, I said that $1 billion is a journey which we are trying to do. In that journey, automatically in terms of organic growth, I can come and talk to you at 200 million, I will grow at about 20%. At 400 million, I cannot say that I will still continue and confident that I will grow at about 20% or 25%, but because I need to make my steps and amend over there to get to that level of 25% growth on that day at 400 million. So while this combinations runs through as a $1 billion journey, we are cautious and we have laid our plan very clearly, though we are not in the process of giving any guidance. We are cautious in terms of what comes from organic and what comes from inorganic invariably. So we are sure that we are monitoring the situation and we will not be doing any kind of a hasty decision to hamper the business or hamper the the result and valuation or whatever.
Sure, sir. And sir, lastly, just wanted to touch upon this margins that, I mean, the company has shown dramatic improvement, better than expectation, especially looking at the sector on the whole, and in fact, other IT companies are facing a huge test. I mean, all congratulations to the management for pulling this feat. So, but again, looking at the economic environment, so the kind of price hike that you were talking about, that you were expecting from your customers, so you think that we have a reasonable, our clients and customers will be cooperative, since pricing should be under pressure looking at the economic situation, whereas we are looking for a price hike?
No, I beg to slightly differ on the pricing. Probably, Vinay, you would like to take up this question in terms of the pricing?
Sorry, Krishnan, what was the question?
The question is that there is a recessionary trend and global headwind, and we have talked about price rises signed by the customers. So his question is that will we have challenges as against price reduction? We are talking about price increase. So that is the one which he's asking.
So it depends on the kind of services which we are providing to the customer. So if you take commodity services actually do remain under price pressure because of the competitive nature of those services. However, if you take digital services, there, as I mentioned earlier, the demand for highly skilled people continues to be pretty strong, and therefore the pricing power actually remains to be with service providers. So, business as usual, run the business segment actually will remain under pricing pressure. Change the business segment actually will continue to provide better price points irrespective of the recessionary pressure. As long as I think the demand-supply gap continues to be there in the digital engineering services, the pricing power will remain with the providers.
Great, sir. Sir, thank you very much, and best of luck to you.
Thank you.
Our next question is from Arun as an individual investor. Please go ahead.
I have a couple of questions. Can you hear me?
Yeah. Please go ahead, Mr. Yeah.
The first question is, this digital services, are there operational challenges? This is coming out as a new business. And second, does it require some product investment? Does the company run the risk of product write-offs in future where they have to invest for these businesses? That's the first question regarding the first one. Second, the American inflation is largely services wage inflation. Their cost of their corporates is only 10% commodity, 16% wages. With our exposure, our clients being largely American service sector companies, is there outsourcing more you find in some pocket customers so that they are able to rein in their inflation?
Just to answer your question, probably I will bring both Raghu and Vinay to answer in terms of the the investment into the product and also talking about the offshoring model and inflation. But just clarify a point basically which I wanted to do is that we don't have, effective 2017, we don't have, as an accounting policy, we don't capitalize any of the expenditure which has been spent on development. It is absorbed in the quarter in which it is spent. So with that clarification, you can be rest assured that there cannot be any kind of a write-offs coming in the future very clearly. So with that clarification run through, I invite probably Raghu to speak on the requirement of investing into this digital and offerings, and Vinay for the market landscape in terms of more and more customers optimizing their costs in trying to outsource more, which could be proved to be an opportunity. I think a light on these could be helpful.
Okay. Do you want me to take that first?
Yeah, please go ahead. Yes.
Yeah. So I think your observation with regard to the wage inflation is obviously, so as you know, this wage inflation is actually being driven by the inflationary pressure which is there across the market, predominantly actually being driven by the energy prices. Nevertheless, one other thing which is obviously playing in favor of American clients is dollar being strong. Having said that, the outsourcing generally actually is driven mostly by the supply-demand gap. So there is a dearth of talent which exists, in overall American market. The American corporations actually continue to transform themselves into digital enterprises, and therefore that transformation requires significant amount of workforce to do that, skilled workforce to do that, and that skilled workforce is something which is not available here. So besides the cost saving part, which is actually mostly used in run the business, but the change the business is where most corporates actually are spending money today. Run the business continues to remain under pressure on a year-to-year basis. That continues to be shrinking. The pie is shrinking. So, as I said earlier, that I don't see in short term that demand is actually getting fulfilled, and that will continue to drive demand, particularly for providers like us who have a global delivery model. Purely from demand perspective, as I said in my commentary earlier, that we are not seeing that demand stemming down. There is a cautiously optimistic approach which we are noticing, but the projects are not getting shelved. I hope I answered the question.
Yeah. Sure. I think Raghu, you would like to just chip in to talk about in terms of any blockades in the offerings, which involves huge investments in the products. That's the question.
Apologies, sir. Please note that the line for Raghu has disconnected, and we are unable to reconnect him.
I can. Okay. So
then even products, the more the question is around, is the organization able to adapt easily to offer more? When you talk of mining the existing customer, the talent pool, say from being a testing company to a digital company, so this is a large transformation in Cigniti. Is it happening smoothly, or do you see future cost pressures at least for the next 2-3 years as this transformation happens? Or we see margin expansion provided the revenue comes at the rate our wage inflation keeps up?
Yeah.
There are two things here, Mr. Arun. Sir, go ahead.
Yeah, just to give you, I think you heard from Raghu, Krishnan, and Sai and Srikant earlier that our predominant engagement with the customers actually has been on the testing as well as digital assurance side. Now, many of these customers, as we have deepened our relationship, these customers actually have had many projects which actually have been running on overall development side, and they keep actually asking us to provide that help to them. Now we are proactively reaching out to them. How we are developing that talent is one, obviously reskilling the resources internally, where we have internal talent development programs where through which we are obviously recruiting very actively in the market to acquire these skills. In addition to that, you heard that we made an acquisition last quarter, which we completed last quarter. That acquisition actually has helped us to ramp up our skills into digital engineering skills, and also position ourselves to acquire business into digital transformation projects which our existing customers actually are pursuing. In addition to that, from an overall positioning perspective, most of our existing customers actually have welcomed it. Nevertheless, it certainly, there's work to be done, particularly with regard to the pricing for providing digital services as compared to digital assurance which we do. And we are continuously working on that. And as I think Srikant mentioned in his commentary, that we are seeing a good amount of traction, good pipeline, opportunity pipeline in our customer base. All our new customers which actually we are pursuing currently, there we don't have a challenge of our position, and therefore our conversations with those customers actually start at a digital engineering services level, with of course the quality engineering which continues to be our focus, being at the core. So that's where we are. I hope I answered your question.
Yeah, sure. An extension to that, from a product standpoint, we typically don't end up building products of our own. There are point solutions we try and build and try to leverage and reuse across clients. That is one. And the second one is we of course depend on the partner ecosystem to bring in all the deficiencies in case we have any. And we have a strong partnership and alliance system that some of these requirements. Okay. Thanks for the explanation.
Ladies and gentlemen, that was the last question for today's conference. And I hand the conference back over to Mr. Srikant Chakhilam for closing comments. Please go ahead, sir.
Yes, thank you. Thank you everyone for attending this call and clarifying all your questions. We look forward to the next Concall. I wish you all a happy Diwali and be safe. Thank you.
Thank you.
Thank you. Signing off. Thank you, everyone.
Thank you, everyone. Thank you.
Ladies and gentlemen, on behalf of Cigniti Technologies Limited, that concludes this conference. Thank you for joining us, and you may now disconnect.